Welcome to Framework Fortune. I'm your host Ben, and it's time for another one of Ben's stock reviews. And this stock is actually a community requested stock from subscriber with the coolest name I've ever heard on YouTube, Ragnar Dogecoin. So thank you to Ragnar Dogecoin for putting this stock in the spotlight. And remember, if there's any stocks that you would like me to review like this in video form, leave it in the comments below with the ticker symbol and the company name, and I'll add it to the list to get to. So let's stop chatting and dive right in. This company is Upwork. I have heard of it, but I've never actually looked into it. This is going to be a new one for me. Looking at it right off the bat on the website, you can see they're connecting businesses with great talent to work without limits. And the stock is currently around $41. And that's a 15-minute delayed chart. But we'll look at the real charts here in a little bit. This is the investors relationship part of Upwork's website. You can find that by going to the home page and going to the very bottom, and you will see investor relations right here. And it'll take you to this page. So they are basically a middleman company between businesses and freelancers. So there's a lot of those out there. Fivver was the big one for a while. So I'm a little skeptical because these seem to come and go all the time. But let's dig in and maybe we'll find something that will give me a little bit more interest in this company and this stock. Check out this recent press release here. They're introducing Talent Scout. And Talent Scout is a recruiting solution that connects companies with pre-vetted expert talent selected from Upwork by specialized Upwork recruiters. Talent Scout represents an additional way to access and engage talent as part of the ongoing focus on offering a dynamic one-stop online talent solution serving customers' full spectrum of talent needs. So basically they just have a team that's going to scout out the best workers, I guess, on Upwork. Probably make sure that they're on time with everything, and that I'm sure there's some qualifications. But if you go down to here, you can see the About Upwork part, and here's where it's a little interesting. We serve everyone from one-person startups to 30% of the Fortune 100 with a powerful, trust-driven platform. So if they're working with some Fortune 100 companies, that's a little bit bigger than Fivver was. So let's go ahead and dive into their investor presentation and see what we find there. So their mission to create economic opportunities and independent talent at the heart of every business. And here's a little glance. Let's take a look at this. So we got 786 million, almost 787 million in marketplace size. Their revenue for quarter one was 113 million, so that's nice to see. Client spend retention 106%, and then their core clients, they have 152,000 people. Now you look, gross services volume has been growing year over year, and looks like quarter over quarter. But you got to ask yourself, the pandemic seems to be slowing down, and a lot of places are opening back up. How many people are going to leave the online space from working from home to going back to buildings? They may not at all. A lot of people learned that they don't have to go to some building to work their job. They can do it from home, and they prefer that. So it's kind of up in the air right now to me whether or not they're going to keep gaining customers or if they'll see a big dip in customers as things start to open back up. But if they're working with some Fortune 100 companies, depending on those companies, they could have pretty solid, steady business. But let's go in a little further here. So it is a large market. It's the whole globe. This is the largest work marketplace, predictable business model with strong retention metrics. And here's the global labor market. So that's kind of what I was talking about, whether some people will go back to work. But still, they may be even if they do go back to a building, they still may be doing the same work that they're doing on here. So it may not affect this company. I don't know. There's a lot of uncertainty right now with the markets and the economy. But the fact it is global does make it a little bit better of an investment instead of just relying on a company that's only in the U.S. or only in certain countries right now. They've got 73% people with college degrees, 21% with postgraduate degree, mid-market and large accounts. I don't know what Genesis is. I do know GoDaddy. Microsoft, that's a big one. I'm not sure about Amgen or these other ones, but there's GE. So Microsoft and GE working with this company is nice to see, and GoDaddy as well. These other companies probably are big companies too. I just not familiar with them. Okay, that's interesting. Proprietary data algorithms and machine learning power talent curation. So I would be interested to find out more about their proprietary algos. Those type of setups right now, the data collecting and algorithms, all of that is pretty valuable. So here we go. Financial highlights. 91% of their 2020 total revenue was from Upwork Plus. They get 5%, 10%, and 20% service fees. So, yeah, they've got a monthly subscription business model. We've talked about that before. That's always a good thing because that's going to continually generate revenue, and as they get more customers, that revenue is going to keep increasing, and it just keeps making more and more money. So it is a good business model. Here's the Upwork team, and you can see a lot of big names in these people's experience. Hayden Brown, the president and CEO, worked at Microsoft. Live person, McKinsey and Company. The CFO, Jeff McCombs. Facebook, Yahoo, OpenTable. OpenTable is a restaurant app for seating and stuff. Sam Bright, eBay, Merrill. And we got Eric Gilpin. That name sounds really familiar. Career Builder. I don't know why that name sounds so familiar. If you guys know something about Eric Gilpin or something like that, let me know. And then HR from Yahoo, and then Legal and Policy from eBay, and that looks like one of the movie companies. So they've got a lot of experience. That's a good sign. So that's all I pretty much need to see the investor presentation. If you want to go dive into it further, you can go check it out on that investor relations page. But it's pretty straightforward. It's a company that has the monthly subscription business model with fees, and they're a middleman company between businesses and workers, skilled work, freelance type of work. Let's go dive into Yahoo Finance and take a look at some of those numbers there. You can see the 52-week high was $63, 52-week low $11. So it's actually up pretty high at the current moment. You got a couple of negatives there, showing $404 million on the income statement, $269 million gross profit. Okay, and then the float is $114 million, so not a terribly big float. You got 9.3% held by insiders, 68% held by institutions. That's a lot of institutional holdings, so that's pretty interesting. Small shares on the short float, no dividends, balance sheet total cash $169 million, total debt $32 million, so that's a good debt to cash and asset ratio. And then they got 25, almost 26 in operating cash flow and almost 17 million in levered free cash flow. So I like this. I like the finances, and they're definitely growing. Even if something does happen, like I was talking about earlier, and it dips, that would probably just be a good buying opportunity. This looks like a pretty strong company, really. So let's go dive into the charts and check it out. And it looks like this company just came out on the markets around 2018 October. IPO'd, dropped off, and then came back up and couldn't break over that open price, so it sold off pretty hard, and it was all the way down to $5. That would have been a nice price. And then, of course, it rebounded like the whole rest of the market, making a huge spike. So it is in some lows right now, possibly trying to find some support at this 35 area. I feel like it's still kind of overvalued. I would like to see it come down maybe to like 25. Yeah, right across here. Because right now, May 18th, 2021, I'm bearish on the stock market, and I'm bearish on any of these kind of speculative stocks, these newer companies that are in the digital world and can explode like this one has. But if the entire stock market crashes, these are going to get hit hard because they are some of the most overvalued stocks. And at the moment, we're seeing a rotation from these overvalued tech type of stocks into more traditional commodity stocks that are a little bit safer during sketchy times, like oil, gold, silver. So it's not a bad company. It's definitely got its merits. It does have the ability to rip hard, but that also means that it can drop really hard. They are making very nice money. They're turning bigger revenues every year with their subscription model. Their cash to debt is a good ratio, and they've got assets, so it's a pretty good, solid company. So that's it for this episode of Ben's Stock Reviews. And once again, thank you to Ragnar Dogecoin for giving us this suggestion. It was a great suggestion. It definitely is one that I think the long-term investors should keep on their watch lists and check out, because it does have a lot of room to grow and it's doing really well right now.